Hey everybody, it's Wednesday, the 16th of June. Happy Wednesday to everybody. I just finished listening to the Fed meeting with Powell. Didn't catch all of it, but it looks as if they're going to hold the interest rates steady, at least for the end of the year. There is some inflation concerns, but we won't have any rate increases probably until 2022. So the market did react well to that. We were down a little bit prior to the announcement at 2:30 Eastern, but it seems as if it seems as if we're doing well. So it seems I think everybody uh, had a collective sigh of relief. I'm going to kind of look at some of the live charts here and see how things are trading. Right after this announcement. This is the chart for the Nasdaq Composite. This is all the stocks in the Nasdaq. Currently, I'm going to look at the 1 minute chart here. As you can see, when Powell came on the air at the 14:30, that's 2:30, he started to make his announcements, and we're starting to see it pull back up. We pulled below that very key level, that 14,000 level, and now we're working our way up. So that's looking pretty good. We're over that key level at 1440. So that is indeed a good situation there. Just also want to kind of look at right before we came on, the Dow Jones basically had pulled lower, but again it had a similar reaction as it went forward. So that is indeed a good sign. We had been pulling back on the Dow Jones, and it pulled up. So that's kind of key as well. Also wanted to take a look at how the S&P 500 is trading. Again, very very similar pattern. We pulled all the way down, and then there was the Fed meeting, and we pulled up. So that in general is looking pretty good in terms of how the market is trading. So hopefully we won't lose too much ground, and we'll continue our upward trend. That's the main thing here, is that we have a nice upward trend on the market, and that hopefully going forward will will be very bullish. I'm hoping it will be coming into the summer. Um, I wanted to take a look at several other things here. I want to look at the QQQ. This is the ETF that covers the Nasdaq 100, and just kind of see how that has reacted to Chairman Powell's remarks. And it does look like it's definitely moving well. People were waiting, I think, for Powell's remarks on the interest rates, and of course that enabled it to sort of rebound here. Because remember, low interest rates are going to favor many of the growth stocks that are so important. Also want to take a look, kind of see how Apple has traded through this. It was pushing on 130 right before, and it looks as if, yeah, we have passed above that. So what's happening here is I'm really waiting to see a reversal on Apple, because Apple is such an important stock in the Nasdaq. It's one of the largest, most widely held stocks. So it does look like that it is going to power through that very critical 130 level. So that indeed is looking kind of good. So let's, without further ado, let's get to some of the questions. Thanks. Okay, and first one up is West. Um, what's your thought about Root? Root. Root Boy Slim. I don't. You remember? You probably don't know about Root Boy Slim, but that's a blast from my past. That's for sure. Root does not look very good. It's looking kind of like it's an insurance company, kind of like Lemonade. Not really that excited about it. If you can see, it definitely has a downward trend. And again, I am not a big fan of buying stocks that have this downward trend. It's got a relative strength of 3. I mean, I sound like Debbie Downer here, but it does look like indeed, it's pulling back, and not a stock I would be buying right now. It just doesn't look that good in terms of everything. The industry is not good as well. The insurance industry, property and casualty (P&C), is sector, 112 out of 197. So that's really not where we want to be looking for stocks, because those are the stocks that have not been doing as well. It's an IPO. It's in the wrong sector and it's pulling down. So I just wouldn't be in the stock. I mean, I just like to make one of the things that I think is very, very important when you start to look at the stock market seriously as a potential business, is that you've got to be going where the rest of the money is going. And right now, insurance and property and casualty, that's not an area of the market where that is moving in the right direction. Now, one areas that are moving in the right direction, let's kind of bring this up, is basically the number one area right now in industry group rank is retail consumer electronics, and of course this is where Best Buy is. Number two, where I've been concentrating most of my buys, has been in the oil and gas U.S. exploration and production. That is one of the most increased sectors. 6 months ago, this was 121, not an area that you'd want to buy in. Currently, it's number two. So there's been a heavy investment in this area. Another area that has seen a lot of investment recently has been the retail leisure products. Now, I don't currently have any holdings in this. I would like to get ownings in this one because this is also very good. There's quite a few in here. Now, 6 months ago, this is a 103 sector. Currently, it's 4. So that's definitely also where we ought to be looking. Another area that has been very strong that I've been buying in as well, the oil and gas royalty trust area. It was 140 6 months ago. Currently, it's number 7. So those are the kind of the areas that I'm looking to add. So I want to show you a stock that was breaking out today, that I started buying yesterday. I don't know how well it's done, but let's take a look. It is, let's see, yeah, it's BP. I think I may have gotten shaken out of this one, but this one is still right in the buy zone, and it is a stock that will probably benefit with inflation, and definitely that's the case. That's what's happening in the market. Now it's pulled right down to the buy point, which is 513. It's at 515 right now. But this is also a BP Prudhoe Bay Royalty Trust. I did buy this one. Now hopefully this will work. This is a base on base formation, and as you can see, I'm going to go back to the monthly chart. This stock has been, in the past, it's been all the way up here at 130. It has made a reversal. This is a classic reversal play, I believe. This is quite a few years ago, but back in 2009, this is also when we had a lot of inflation. This is, remember, if you can remember back to the Obama administration, in 2013, that's when the housing crash started, and we did have a lot of money being pumped in the system. At that point, this was selling for about $100 a share. Currently, it's about $4 a share, $5.15 a share, and probably will see an increase. It is pulled all the way down. Of course, last summer was the absolute low for it, and hopefully it's moving back up. But that's where I've been concentrating many of my buys. Why? Because those are the areas in which that's where the market is telling us that that's where the big money's moving. So I'm trying to follow along with some of the big money there. One other thought about TSM and Workhorse. Workhorse is, of course, very high short squeeze, a very high short level on it. But let's look at TSM first. TSM, of course, is Taiwan Semiconductor Manufacturing. It's an extremely important company. They manufacture for almost all of the, for many of the companies out there like NVIDIA, and they're just very key in the whole supply chain. Now, of course, there is a semiconductor shortage, and partially due to the fact that Taiwan Semi is running basically at capacity. I do think that this one, it has made a reversal. This is the reversal line here. It's still pretty weak in terms of the sectors. It's 146 out of 197. So right now, this Taiwan Semi is making a reversal. It is moving higher, but this is not the best sector right now. The relative strength, I'd like to see it a little bit higher. You could probably start nibbling at this point in it. I'm currently not in the stock. It does fail on several occasions, on several things. The checklist really needs to be. I'd like to see it a little bit stronger than this, but 66% is not bad. It's more than 15% off of its all-time high. It does have a relative strength less than 80. But it's 77 and increasing, so that's a good sign. And the accumulation, it's not being accumulated by many of the big funds, as many of the big funds right now. But other than that, it's a good stock. I'm not trying to throw shade on it at all. It's an excellent stock, but I don't think it's necessarily the best sector to be investing in right now. That's just my opinion of it. Let's take a look at Workhorse to see if we have anything there. WKHS, and of course, this is a little bit different situation with Workhorse. We're looking at a stock that potentially is going to, is potentially setting up for a short squeeze. So here's what I'm going to do. I'm going to recalculate the amount of short interest in the stock to see kind of, where we're at in terms of this. So basically, there has been an increase in the percentage of amount of people holding this short of 17%. Currently, the short interest is 2.4 days times the average daily volume, which for Workhorse is 18,919,300 shares. That's the average daily volume, giving us amount of shares sold short currently at 45,406,320. And if you divide that, of course, by the entire float, which is 108,500, there we go. That's going to give us the amount of shares still short are 0.42%. So this has the potential of seeing a short squeeze. I can't give you the time if that's going to happen, but it does have that. So what I'm going to do is I'm going to look at the 10-minute chart, see how it's been trading. There is, if the short squeeze is going to start, it's going to start above about 1850. So what will happen on this, if it goes, is that it will break above this level, and then probably on heavy volume, and then probably go higher. So right now, I am not in the stock, but there may be a short squeeze coming on this one. At 42% of the shares sold short, I think there's a potential of that. So you might want to get ready. I wouldn't be buying it now. I want to wait until it moves above about $20, and then if you get into the stock, you've got to be moved very quickly because this can pull back. The short squeezes typically don't last very long, and when they do, you want to get in them, ride them up, and move your stop loss up. Basically, I think that with TSM, it might break resistance at 120. With Workhorse, again, I think that above $20 is where you're going to see that take off. But be careful on these short squeezes because they can be very, very tricky. You can get burned on them very easily. So let's go to some of the questions from there we go from TikTok. Okay, I'm gonna go down here. Okay, I love that I entered into TSN. Okay. Oh, and the oil peak during the pandemic is paying off. Okay, great. Yeah, oil prices are going to continue to move up. I believe. I really do. I think oil prices still have a ways to go. I want to check there's a kind of an ETF that's fun to play. It's called Gush, GUSH. I kind of want to see how it is trading. Yeah, it's still pretty flat, so that's really not an option right now. But a lot of money is moving into the area of the of the oils, and I definitely have as well. Let's look at TIGR. I think that's TIGR. Let's look at it really quick. That's the FinTech Holdings, and this is a interesting. Okay, so this is a China-based stock. I haven't been too aggressive in the China-based stocks as of late, but this one looks like it's setting up. It's got a very strong relative strength. My only concern here is that it has a good checklist. I don't think it has. Let me just look at the funds. There's 35 funds in it, so there is some funds that are moving into this one. This could be some potential here. It doesn't look necessarily bad. Okay, so this is sort of like a mobile Charles Schwab. Okay. So could you enter at this point? Well, unfortunately, there isn't really a good base pattern on this right yet, but it looks like it's forming here. So on the weekly chart. So if this moves over above about 34, then I think you could possibly consider it. I think that would be about it. The reason is you want to see it making that new high. And it does look like it's moving very nicely, but you've got to be careful with these because you want to be in it right before it breaks out, of course, and it breaks out higher. And I think that's going to happen right about 34. So I appreciate that comment. That's a good comment. All right. Thoughts on DraftKings? Another state legalizing them. Yeah, Kathy Woods bond. Well, it's true, Dinesh. Kathy Woods is a great investor, but I think that if you look at her portfolio this year, because she's so heavily invested in the in the tax, you'll see that I think it's down. But I want to take a let's look at DraftKings right now in terms of the chart. It's still below the 200-day line, so I'm a little bit concerned about that. I wouldn't be a buyer below the 200-day line. I want to see it move to a higher high, and that's really not the case here. We did have a reversal, but it looks like it is a failed reversal. So I'd be extremely careful buying it right now, just because this might cause some problems. So let's take a look at the ARK Invest funds. ARKK is a symbol, of course, it's an ETF. As you can see, this is not a stellar chart right now. Why? Because of course, last year it was making all kinds of money, it was printing it basically. Look at that, just right up. But since then, because ARK Invest and Kathy Woods is so invested in tech, I'm not saying 5 years from now this is not going to be the case. I do believe that it is, but at least for right now, I think she's going to be struggling in an environment that is seeing an increasing inflation. I want to compare this chart here against. Let's take a look at another sector of the economy, the oil and gas E&P. Let's look at that. See how that's been trending. You see, this is a much better chart. Now, why am I comparing ARK Invest to the oil and gas E&P? Well, because Kathy Woods did great last year. Her chart looked like this last year, but why not buy a chart like that this year? This year E&P is going to move up. There's just no question about it. Just take a look at the way this chart is trading. Just take a look at the sector that it is. This is the number 2 sector out of all of them, and it's got a relative strength of 99, and it's trading well above the 200-day line. So the thing about Dinesh right now, at least, and we have heavy buying. So the thing what's going on right now is that we are seeing this movement into some of the oil and gas stock. Now this is totally based on the price of oil. When the price of oil comes down, then this group is going to you're going to want to sell this group. But at least for right now, buying in this group is probably going to be a good thing to do. I've bought several in this group. They've all up basically about 20%. Now I've sold some of my winners, and I'm trying to recycle some of the money. Here's one I think that is a potential, and again I keep talking about this. This is SM Energy, and this one is potentially, at least in the near term future, looking pretty decent. I'm showing you the daily chart here, but we moved above this buy point, this 1915 buy point. It moved way above that. It then corrected, and then it looks like now it's corrected and it has bounced off the 21-day line, and it looks like it's going higher. So this is one that you might want to look at. It has a 99 relative strength, and the relative strength line has continued its upward momentum. So this is the kind of area, this is the kind of stocks that you want to look at right now are probably in this oil and gas sector. It's been doing well for about the last 3 months, whereas many of the tech stocks have not been doing as well. That said, I do have exposure to the tech sector. I've got a large position in Nvidia, but that's a special case because it's splitting 4-for-1. So that I kind of want to get your heads up there. Most of my new buys have been in commodity-based areas, primarily oil. Why? Because oil, oil is the one thing that when we have inflation, you will see oil prices go up. That's just the way it works. We were in relatively, we had a sort of a little bit of a deflationary environment last year with the price of oil going down, but now I think that now that the economy is reopening, I think that we're going to see it go higher. So, just kind of a FYI. I know that oils are not very fun to invest in because they're all kind of very similar. So, there's not a lot of technological improvement. So, in a lot of them, but I do believe that my favorite areas, of course, are oil and innovation stocks. I love innovation stocks. I love stocks that are in the QQQ. But right now, if there's any hint of higher rates, which doesn't appear to be the case because of today's meeting with the Fed, the stocks that are in the Nasdaq probably will suffer. But as an inflation hedge, the stocks that are related to oil probably will do a little bit better. So let's look at HOME. Thank you very much for that. HOME. And that is the at-home group. And I don't know what they do. I guess they provide, home decor. This is a very good group. This has been a very good group during the pandemic because instead of traveling, a lot of people have gone and improved their homes. Like Restoration Hardware is in this group. Very good area, 21 out of 197. So this is definitely a place to look. It's pulled back a little bit, but I do think this group is doing very, very well. I think this is a good call. Take a look at this buying action here. That's excellent. We also have an increasing strength in the relative strength line, which is good too. It looks like it's in a tight pattern. When you see a pattern like this where it's very, very tight, both buying and selling, this is sort of where the strong hands and the weak hands are sort of duking it out, and eventually this will probably pull higher. So this may be a very good time for at home. This is a very good call. I like this. I like this chart a lot. It's got an excellent checklist. The only thing it's failing on is the earnings per share, but everything else is lining up. So that's really looking good. Lots of very good funds that are in it. We have the Lord Abbott, which is excellent. By the way, this is when you ever see Lord Abbott in something, that is one of the premier funds. So this is looking very, very good. Matt, I think you've picked a real winner. I definitely think the only question here is where are you going to buy at what level, but this is definitely one you want to have on your watch list to buy. It looks as if it moves past about 37.50 up, yeah, it just went after hours, then I think you could buy it. So put this on your watch list. This one you might be getting ready for tomorrow, see how this thing opens, because this had excellent earnings. The earnings were up 183%. The sales were up 183%. The earnings were up 243%. This one is probably going to take off tomorrow. This is a good one to put on your watch list. I'm going to put this down on mine. HOME. This is looking very good, and a possible buy for tomorrow. So very, very good, Matt. Let's take a look at SBLK. Let's look at that one. SBLK. And Starter Bulk. Okay. The commodity haulers, this has been a great group, but I think this is slipping a little bit. It's still 5 out of 197. So it is in this consolidation. This is a tough group to play. I've been in Zim, which is of course in this group. Let's kind of take a look at this group. This is Number 5 out of 197. So I'm going to go take a look at the members in that group. There we go. And that's going to be this group here. And let's look at the transportation group. I kind of want to see who is, which of the stocks. Zim, of course, is number 1. Starbulk. So you're definitely in the top 10. I think that's where you got to be. So Starbulk looks pretty good, actually. Let's look at Zim. Yeah, Zim is there's just no place to buy Zim, unfortunately, but it's up strongly again. So this is the leader right now in the group. Starbulk is in the top 4, but the leader is Zim Shipping, and unfortunately, there's just not a really good place to buy this. Well, you probably could buy it as it pulls back to the 21-day line. That would be a place that you could buy it, and it looks like it did today, and then it's up after hours. So if you're looking for it to be in this group, and the relative strength line is down, Zim is probably the leader right now. But both a very good group, and Starbulk, is not bad. But out of the two symbols that you gave me, I think it's Home that you want to look at. They just had some excellent earnings, and it's looking very, very good. All right, should I sell everything? This is a question from TikTok. No, I don't think necessarily. What is it? Home. Home, the symbol HOME, is a company called At Home, and they are a retailer of furniture, and they're doing very, very well. They had an incredible blowout earnings today. They were just excellent, and it looks like tomorrow morning they're going to be trading higher. So that is what Home is. That's the symbol. So thank you very much for that. Thank you very much for that, Matt. That was an excellent choice there. Brought Workhouse in the morning at 14:50. Set stop loss now as thoughts. Okay, 14:39. Let's look at. Yeah, this is. It's good that you're setting that stop, because this is a good way to play it if you're going to play it. WKHS. Workhorse is not a stock that you would really quote unquote invest in, but it's not a bad trading stock. And it looks as if you have made a good move here by setting your stop loss at 14.39, because we're already up in the after hours, 14.85. So here's the strategy that I would use on this, Nathan. I would just continue to move my stop loss up. I mean, so basically right now, your stop loss, let's just kind of put it on let's just sort of put it on there, but your stop is at 1439, which is you did I think that's very smart, yeah, which is right here, which is right below the 10-day moving average. So that's a good place to put it. I think that we might have bounced off that, and it could bounce all the way up, and hopefully it moves beyond 20, but that's not a bad place to have your stop. As it moves up each day, push your stop loss up within 2% of it, and I think that if it does pull back, you'll be protected, but you'll also get the benefit of it moving higher. So I think that's a good move on Workhorse. Workhorse is potentially going to be short. Is being shorted. 42% of the float is short. So this has the potential to have a short squeeze. So by doing this, you're protected on the downside. I think you can ratchet up your stop, and I think you might end up making some serious money on that. So that sounds like a really good play there, Nathan. Really, really good play. What about ALZN? Let's look at ALZN here. ALZN. And that is interesting. Okay, I don't know about this, and this is just a brand new IPO, and it just came out. So tough to figure out anything on it. It basically came out of the gate at $10. I think that, yeah. No, it IPO'd at $5. It's doubled in price. It's just really hard to buy these IPOs when they come right out of the gate. It's kind of like, you can buy them and then push your stop loss up, but I think this one is probably very thin. Let's look at how many it trades. Yeah, it does. Yeah, its shares are 1,180,000. So this doesn't trade enough shares for me to do. It's also very thin. So I'd be careful with this one. I think you want to wait for at least 30 days to see how it trades. This is very thin. There are some liquidity issues with Alzamin Neuro, I guess that's what it is. So I think you got to be a little bit careful with this one. And when they come out of the gate, it's, you see that there and you see, wow, that's really great, $5 IPO. Well, that's to the people that have, that's basically to the investment banks. They get it. Why? Because they're the ones that put up the money in the first place and then took it all the way to the IPO. So that's sort of their bonus for doing that. So I would be very careful on that until it's traded for at least 30 days. All right, let's take a look at one of the SPACs. I don't really like SPACs, but this one, a lot of people invested in. This is a Bill Ackerman deal. I am not a fan of Bill Ackerman. I'll be honest with you. I think he's a little bit of a charlatan, but I'm sorry to say it. But this one, I think that you don't want to be in this one. It does have a relative strength of 91, which I find absolutely amazing. This is the weekly chart, but if you look at this, it's got a downward trend. There it is. It's proofs in the pudding. This has got a downward trend. Now, maybe it will reverse higher, but the problem with this is there's no there with this one. It's just somebody's bank account that they might, acquire an electric vehicle company. Who knows? I mean, yes, it could work. No, it can't work. But this is the kind of chart that you got to be careful with. I'm drawing a trend line here, and I'm going to set an alert on the line, but it doesn't look good. This is a downward trend, so I'd be really careful with Churchill Capital CCIV. So I'd really be careful with this one. This just isn't really a good. I don't think this really is going to serve you well. Serve you well. So you got to be careful, and I would be very careful with this one. All right, so let's look at Mesa. I wonder if this is Mesa Petroleum, MESA. Mesa Petroleum years ago, Timo and Pickens. Mesa Air Group. Okay, well the airlines. Here's the problem. Mesa is probably one of the best of all the airlines in terms of profitability. They're what they do. I'm sure you know this. They're a regional carrier, and what they do is that they basically fly for other airlines. So, like, you might be on a United Express, and it might be operated by Mesa Air Group. So, it's one of the more profitable groups, but overall, this group just isn't doing well. It's the airline transportation group is 151 out of 197. So what I'm going to do is I'm going to take a look at this. This is, I just don't like to buy in the bottom. I don't like to buy in the bottom third of the market, and that's essentially what we have here with the airline. So I'm going to go down here to the airline group, which I guess is 151. Yeah, there it is, Transportation Group Airlines. So let's take a look at that group. This is the group in general, and it has been going. Oh, that's machinery. I'm sorry, that's not the group we should be talking about. I want to talk about the airlines, and I think they've started to recover somewhat. So let's go to the airlines group. Yeah, it did recover. There was a lot of anticipation with the reopening, but now the group in general is moving down. So I don't really like this group. I don't want to buy a group. And this is kind of, this is sort of my rule of thumb. I want to look at the groups that are ascending as a group, and then I want to buy the strongest in that group. Right now, airlines are not; they're descending, and so right now the strongest of all the airlines is Love, which is Southwest. It's in a downward trend. So I just think that you need to sort of look at possibly avoiding this group. It just doesn't have the it's just moving in the wrong direction. So one of the things I do, and when I look at a changing market like this, is I'm looking always at which areas of the market are being invested in the most by the biggest funds. Now currently, that is the oil-based commodity areas and leisure products. That's those and some retail. That's where the money is going in the market. The money is coming out of areas like the airlines. So I like to stack. I like to stack the deck in my favor. I like to be in areas, unless there's a very compelling story, and I think that's true in some of the chips and some of the software companies. Unless there's a very compelling story, if I'm going to be in an area, I want to be in an area that is being increasingly invested in, and so that's the reason why I look so carefully at which sector of the economy. And right now, the airline sector just isn't doing well relative to some of the other ones. So here we have a question from Samuel. NVIDIA, you've got an NVIDIA 7:30 call. expiring Friday. What to do? God, I hope it will. I think you probably want to sell this one or roll it because I don't know if we're going to get to that level based on today's performance. I do think we're going to get there. I do think we're going to get there by the 21st of June. I do think we're going to get there by the 21st of June, but that's not until Monday. So I would be really careful about this. I do think you're going to run. You're running a little bit shy of time right now, and that is an issue. So I want to kind of see how it traded today. It didn't. It definitely was a little bit spiky today. It's traded down since the close, but right now it just seems to be range bound. Now I was saying this morning it's range bound from about 710 up to about 720. I guess I take that back. It's more about 705 to 720. We'll see how it trades tomorrow. I do think that going into the day of record, it's going to trade better. But I think that if you have NVIDIA 730 calls right now, you probably want to sell them now because they could expire worthless. Now, I could be very wrong on this, but what you might want to do is sell the one you've got and possibly go out a little bit further, maybe out to maybe the August 20th expiration to give you some time for it to work. I do believe that after by the July 19th, we're going to see NVIDIA probably trading at least at 750 and possibly even higher. That's the day when it splits 4 for 1. I mean, that's when the day it trades after the split 4 for 1. So I just think that you're just running out of time. So don't, it's better to sell now and take a little bit of a loss and roll it forward than just to take risk a complete expiration of the contract. So that's what I would kind of do on NVIDIA right now. All right, CGRY. Let's look at this for Jeet. CGRY. And okay, didn't get that. All right, so let me try another one from. Okay, what do you think about Tilray? Okay, Tilray. Let's look at which. I think these are the marijuana stocks. Marijuana stocks. I was in them very heavily about actually starting about 5 years ago, and I did very well in them. I have not been on them really for about 3 years. It's sort of it's kind of the thing. It's there's just it's like casino gambling. There's just a lot of supply and a limited. Well, there's not a limited demand. I mean, a lot of people want to but this just doesn't look good. This is online. This is this stock. I know it's being heavily touted, but I just think that this one is a little bit difficult. A little bit difficult. This is not a good chart for Wish, so I'd avoid this one. I'd avoid this one. Let's look at Tilray. I think that's a similar situation. TLRY. Constellation Brands did buy a position in Tilray, but the problem again is that we had all of this in up until February. Then there was a short squeeze. That was great, but everything since. Just kind of want to show you the history of this stock because Tilray did do very, very well. As you can see, back a few years ago when I was trading, it was doing very, very well. But then, really in 2018, it broke down, and it really hasn't really recovered. It really hasn't recovered since. So I would be careful with this one. With Tilray, I just think that there's just some better merchandise out there right now. That's just my opinion. SGRY. Thanks, Jeet. Let's take a look. SGRY. Surgery Partners. Interesting. Okay. Well, this is a good area. Medical and hospitals. 20 out of. This is a very defensive area, sector of the economy, but very good. I mean, look at this chart. The chart doesn't lie. This is a very nice chart, moving right up. I just can't. My only issue with this is I don't know of a good place to buy it, but boy, this is looking very strong. This is a strong stock. SGRY. There's no question about it. It looks like they just came through earnings. Their sales were up 16%. They're still. I think are they revenue positive? Yeah, they are. They're revenue positive. So, Yeah, this is a good stock. This is a good stock. You're right on the money. The biggest issue with this one is where to buy it. If you really want this one, I think what you got to do is you got to buy it as it pulls back to the 21-day line. But this is looking very nice. It did pull a little bit lower today, um, but I think this is going to continue its uptrend. So I just looking at this, it just looks very good. It just looks, this is a very good chart. This is a very good chart. Surgery Partners, I think that's definitely a good one. Gee, I really think it is. That's a very good chart, and yeah, I don't think you're going to go wrong. The biggest issue that I have with it, that's not really a big issue. It's just where to buy it. When you have a chart like this, it's just right up that, just moving up beautifully like that. The biggest problem is to not buy an extended, and I don't know if you can do that here, but you know, a pullback maybe to the 21-day line. That's probably the only place you can buy it, but it's a very strong stock, and I think if it just looks like it's not. We'll see. It might break. We don't know, but I still think it's got a ways to go. It's almost a picture perfect chart. It's a really good chart. So thank you for bringing that up. Thanks, Kate. Okay, do we still want to cross 720 to add? Well, I think it's a little bit safer. So let's go back to the and just do some analysis on the NVIDIA chart. Right now, right now I'm a little bit too conservative, but I do think that we're working through some supply issues here, because I do think that we are moving up as well. So let's kind of take a look at kind of where we are. See, we're this is I got to zoom in a little bit on this. I think that we're range bound between about 705 and about 720. I'd like to see it move higher, but I'm going to move this to the 21 day to the 10-minute chart. As you can see, 720 right here is about where it's the higher high. So the reason I like to do this, I like to buy on strength. And one of the ways you buy on strength is that when the stock moves above a higher high on good volume, as you can see, like for instance, let's get a good example for you. I like to buy it as it's moving higher. So for instance, this was a good day to buy it here because it opened and then it pushed up. Now, what we're looking for as a kind of a sign is we're looking on the daily chart to see how it closed. Now, typically, a good day to buy it is when it closes at nearly at its high. So back here on June, I would say about June 8th, this is a good day because it closed at its high, pulled back a little bit, closed at its high again. And today it closed up. It did close up today, and it looks like it pulled back a little bit after hours. But I think I'm saying 720. You possibly could buy it if it moved above 715. I do think that we're going to see it move. Hopefully by July, at least by July, maybe sooner than that, up to at least 720. But I want to make sure that you see we are extended. See, we're above the correct buy point is 648. Now I started buying before that, but as it moved through that buy point, the ideal place was to buy it in here at about 640. But I still think you could buy it because I still think it is going higher based on the split. So it currently NVIDIA is what they call extended, and I normally don't recommend people buy things when they're extended. But in this case, I'm saying that I probably think it's going to go higher based on the fact that it's splitting 441, and that's pretty much the way I'm playing it, at least for right now. But thank you very much for that question. Very good question. Price action on Disney. Let's look at Disney. Disney is a Dow stock. It's a Dow component, DIS. I don't like the price action in the last few days, unfortunately, on it. We're well off of it. What happened is it moved through this buy point at 183.40, and then what happened was it moved above that, but then at when it got resistance at 203. Currently it's at 140, 174. So right now I probably would not buy it, and the reason I wouldn't buy it, very simple reason, it's in a downward trend. So until it makes that trend line, and I just drew a trend line, I probably wouldn't be buying it. So I'm going to set a trend line alert. And what this is that right now it's in a downward trend, but as it moves higher, that's where you want to buy it because that's where the power is. So when these reverse and they reverse higher with high volume here, that's where you want to buy it. So right now it's going down. Right now the trend on Disney is lower. So that's the situation with Disney, at least in the short term. All right, thank you, Nathan. Callum Petroleum CPE. This is in a very good group. I was shaken out of this one earlier. What I mean by shaken out, I bought it and then it pulled down 7% below where I bought it. I still think it's ready to go and move once again. Now, here's the issue. The correct buy point on Callum Petroleum is 42.31. I'll show you this on the chart. It's right here, and then what happens is it moved up and then it pulled back and then it's moved up again. But it's in a tight pattern, so I think that this one, even though I don't like to usually say to buy something extended, this one could be, based on the way I'm looking at the chart, this one could be ready to pop higher. Currently, it probably needs to base, so this probably isn't the best choice in the oil group, just because of the way the chart action was. I would probably be selling this at a profit if I had bought it at the buy point. But let's look at some other potential alternatives that we can find. And I'm gonna go here, and I'm gonna find an alternative possibly for CPE. I don't think CPE, it's a good stock, but I don't think it's at the right location. What I want to look at here is I want to look at a stock. Let's go down the list here to see if we can find a stock that's at the right level, that's in the oil and gas group. And I believe that this one, Permianville Royalty Trust, this is a potential one that this is a very cheap stock. I usually don't recommend stocks like this, but this one is setting up very nicely. This is absolutely a penny stock, and I never recommend penny stocks, but in this case, this has a very nice form. So you might want to take a look at this. I really can't recommend this at this price, PVL, but I just wanted to bring it to your attention. Let's look and see if there's any other things that we can see that are breaking out. That there's actually 25 stocks that are in this sort of area, but you don't want to buy them the super cheap ones because it can be difficult. Now there is another one that is a little bit better. It's Blackstone Minerals. I did buy this one this morning. It pulled back a little bit, but I still think it's right below the buy. It's right below the buy point. Yeah, there it is. It's right below the buy point. This is one you might want to consider as well. It's called Blackstone Minerals. It's an oil and gas company based in Houston, and it's right below. There's a $10.87 buy point. It's right below that. The reason I would recommend possibly looking at this one as opposed to CPE is because this is not extended, whereas CPE is. So this is something that you might want to look at. BSM. I did buy this one today, and it seems to be it's off a little bit in the after hours, but I think it's getting ready just to move through this buy point, and then it'll probably go higher. So. The only thing about CPE, it's a little extended. I don't like to buy extended if I can avoid it. Thank you, Abdul. Thoughts on TRCH? Let's look at TRCH real quick. TRCH, and there we go. Torchlight Energy Resources, oil and gas. Yeah, this is the kind of thing you've got to be looking at. This is smart. This is yeah. Look at that. Look at that. This is a real. After this one's moving. This one's moving. Yeah, it's above 6, so this one's moving. Yeah, I think you might have latched on to something really good here. I wasn't looking at this one, but yeah, this could move a lot higher. This really could. Let's look at the monthly chart. Just kind of want to see where it's been. Yeah, okay. So Okay, so back in 2004, it was all the way up here, and now it's equal to that. So yeah, this one's in play. This one's definitely in play. It's in the oil and gas group, so that's good. It's gotten some strong buying activity. That's good. You know, by the very nature on this one, these kind of stocks, you have to be careful. You've got to put your stop losses in. But this is the kind of thing that you ought to be looking for, especially in a low price stock. And I normally don't recommend low price stocks. I'm not really a fan of them. But in the oil and gas sector, there's going to be a lot of them because there's going to be a lot of smaller E&P companies. There's 60 companies in this group. Okay, so current price. Okay, so we could get rid of that because for the oil and gas group, there are going to be some cheapies in there. Earnings per share percentage. Okay, and relative strength. It's been improving. So yeah, I like this one. I like this Torchlight Energy Resources. Yeah, I think this is good, Abdul. I think that I think you picked a good one. I think that's really that's really that's possibly a find there. Absolutely. I was talking about Build a Bear Warehouse, and let's see if it's still good to buy. It's in a good sector. That's one of the reasons I really attracted me initially. Um, and it's definitely gotten support at the 10-day line. So can you buy this thing? Well, it's seeing support, and it looks as if it is it's holding right nicely. 1716. This is not a bad chart. Yeah, this is a good chart. Look at that. Let's go all the way out to the monthly. That's going to give us an entire history. We see we're finally now. You always want to try to buy a stock as it's making a new high, and Build-A-Bear hasn't not been in this area for a long time. It hasn't been since 2014. It hasn't been there. So, but now it's starting to get time to buy this again. See how it's coming up here? So I think that I don't think Build-A-Bear warehouse workshop, excuse me, is 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 finished at all. I think this is a very nice. This is a kind of a flag pattern. Let's see if that appears in the weekly. Yeah, it's starting to appear. This is a high tight flag pattern, by the way. This could be a very explosive pattern where it moves up like this and then it trades tightly and then it may shoot up again. So we're definitely not we're definitely not Build-A-Bear workshop warehouse. I always say warehouse is looking pretty good, and it's in a good sector. I mean, the leisure product sector, 6 out of 197. So definitely we're seeing some institutional investment in this area, which is amazing, but it's true. And so Build-A-Bear, I still like Build-A-Bear. I'm not in it. I'm waiting, possibly, and I'm waiting for the right moment. I want to see a little bit more power to the upside, then I may be a buyer. All right, question on Digital Turbine apps. And I was trading this one a lot last year. It's a good company. It's unfortunately the sector is not as good as it was. This is my only issue with this sector right now. This sector isn't tracking that as well as it was. It's 177 out of 197. So unfortunately, this computer software area is not doing as well. I'm waiting to get back into this area. I've taken my foot off the gas on this one. I'm just not buying computer software companies only because the sector has as a group hasn't moved as well as I'd like to see it. That said, can we look at can we see this as a leader? Well, here's the problem with Digital Turbine, at least for right now. We're still in a downward trend, even though we're moving up. We're still, and I'm drawing this reversal line. We're still in a downward trend. So what I'm going to do is I'm going to put a reversal line there to see if it crosses above that. But it looks like it's if it can hold here at the 21-day exponential, then I think we might see it move higher. But right now, at least from what I'm seeing, it's in a downward trend. Even though in the last few weeks it's been moving up. So here's the thing: I'm not really confident in buying this one until it makes its way above about 78, 79, in towards 80. That's where if it reverses and it moves up, that's where I want to buy it. But right now it's in a downward trend. So unfortunately, if I wasn't in this one, and I'm not in it, I would be waiting for it to possibly reverse and reverse higher. Right now, it's not in a great group, and so I can't recommend it at this point. All right, let's look at Caterpillar. This is another Dow. This is another Dow component. Great company. Would benefit if there were big infrastructure spending. This is going to be, Caterpillar is the kind of company that would benefit from that. It had been moving up very nicely. It was in this buy zone. Unfortunately, that failed. And so right now, again, it's not doing as well. Unfortunately, this construction machinery, mining equipment, construction area is not where I want to buy it. It's 102 out of 197. So I don't like to buy. I'm always trying to look at my new buys, buying them in the top third, the top 20% of where the money is going in the market. I use the 80-20 rule, and what I do is I look very carefully at which sectors are getting the most investment. And right now, unfortunately, this is not one of them. So I would have to pass on. I would have to pass on Caterpillar right now based on that. It's a great company, but it just doesn't seem like a good entry point at this level. So I got to be kind of careful about that. Let's do another question from TikTok. Let's check XL. Oh, hey, there is one stock that I want to show you. I heard some rumors on this. I haven't really checked this today, but it's the old standard XOM, ExxonMobil, and I think that this one is in a buy zone right now. And believe it or not, here's what I'm going to tell you, and you may not like hearing this, but I think this is a screaming buy right now. ExxonMobil Corporation. I know that it's not a tech stock. It's like 120 years old. It's Rockefeller's company, old company. But I mean, this just doesn't lie. I mean, it's in a buy zone right now. It's going to have strong earnings. If we have inflation, this company is gonna do very well. Now, is it going to shoot to the moon like some of my smaller oils? No, but this is looking very, very strong. Let's look at the checklist for Exxon. I probably want to end on this one. We have a 77 checklist. This is a dividend a machine too, by the way. This company is going to pay dividends. Unlike, here's the thing. AT&T cut their dividends. Okay, these companies are about the same age. AT&T is about the same age as ExxonMobil. Okay, these guys, Exxon, they're not going to cut their dividend, and they're going to be very strong, and the price is right. This is a very good value investment. Now, is this the kind of thing you want to trade? Well, this is probably one that you want to, if you can buy it at these levels, this is one that you might want to go going forward. I think the death of oil and gas is much hyped, but I don't think it's going to happen. At least not probably for at least another 20 to 30 years at the minimum. So we're starting to get to a place where this one is very attractive to buy. Last quarter, they had some very good earnings. Their earnings were up 23%, and remember, this is a mammoth company, and their sales were up 5%. So their earnings per share are up 236. This is a dividend machine. It pays $10. Its cash flow is $10.54 54 cents per. So this is very, very strong. It's got excellent price to earnings ratio. Now, I'm not a value investor. I'll be honest with you. I'm a trend investor. But if you this is the kind of stock that you would want for your value investing, and I definitely think it's good. I don't earn it currently, but I'm considering possibly moving some of my capital into it just because I do think this is going to do very well when there's a lot of inflation. I think inflation is coming. Unfortunately, I wish it wasn't, but I do think it is coming. Well, I'm almost at the end of the hour here. Just wanted to point out some things. Of course, we have our action trade alerts, and those are free. I'm going to probably be putting out some stuff tonight. I have to kind of figure it out. I may have a spread trade that I'm going to put out tonight. I'm not sure. I haven't really finished it yet. But if you want to get on the action trade alerts list, it's super easy to do. It's super easy to do at www.sinfox.com/Dell's Trading Floor. And if you are looking on TikTok, very easy to get on the action trade alerts. Just go to my profile, click the link, and first and last name and an email address, and you'll be right on the free Action Trade Alerts list. Also, we do have a special Discord service, and I'm available on that basically, from the market open and up until I do this show. Taking a look at possible trades, and we have, we have over 50 active traders in there now, and it's sort of becoming a nice little community that we can share some ideas and possibly make everybody money, because that's the whole idea here, is to is to make our is to make money. I mean, that's the thing. I'm trying to I try to put out trades that I'm in, that I have skin in the game. So and I'm trying to show you how I am trading. Now, I'm not always perfect on these, but using some of these methods. These are canceling methods. I didn't invent it, but many of the top traders in the world use this system. So I definitely use the system, and I am a chart reader and a chartist. But if you want to get on the Action Trade Alerts, that's a good first step. It's easy to do. Just go to the profile, click the link, and just get first and last name. Well, thank you, everybody. It's about an hour, and I will be back tomorrow. I'll be back right about 2:30. I'll be 2:30 Central Time, and I'll be back tomorrow. And happy trading, everybody, and I hope you're having a good Wednesday.